Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. I'd like to offer you some foreign exchange charts today. The first chart I'd like to look at is the euro against the dollar. Let yesterday's bearish long black Mariposa be a lesson to all of us and a reminder to me, do not accept a move unless it has confirmation. In this case, there was no second consecutive close over the super important extension of the well-documented upper parallel to the March-based diamond pattern, currently 119.29. This huge pattern has controlled all of this year's action, and it continues to do so still. It does not mean that the idea of a continuation higher is dead, not yet anyway. It does mean that the idea formed over the last 6 weeks of a possible bull flag is on hold after yesterday's pipe top. Today seems still to have some bearishness left in it as prices are moving down to test the broken 2011 today uptrend, currently at 118.11. The next chart to look at is cable, aka sterling against the US dollar. Much like the euro dollar, a lesson in not taking any move seriously unless it is confirmed. In this case, we only had one close over rather than the minimum 2 consecutive closes over necessary to confirm a move up over the two significant overhead resistances that have capped the market since July. The March high at 131.99 and the key 50% Fibonacci line for the whole of the 2016 move at 132.33. Today we've moved lower still, testing the short moving average, currently at 130.75. This is not a major support. The first piece of decent support will be the flimsy looking yet surprisingly sturdy April to June broken upper channel line, currently at 130.12, with the lower time, currently 129.77, of the important May to June bullish shift pitchfork not far below. There was here a similar to euro dollar possibility of a bull flag, just not so large or well defined. That's been formed over the last 5 weeks or so. This is now on hold. It depends on what happens at the lower time as to whether it stays that way. The next chart to look at is euro against sterling. A counter to the counter yesterday. A bullish piercing line pattern that punched back all the way up and closed over all three close market impulses. The short moving average currently at 90.30 and the combination of the broken lower time, currently 90.34, the June to July bullish shift pitchfork, and the short medium moving average, currently 90.25. Today we've had a tentative follow-on higher, but as they approach the important 50% Fibonacci line of the March to April move at 90.85, they've backed off down again. The next chart to look at is the US dollar against the Indian rupee. A bullish white soldier yesterday and a counter to the previous session's bearish black crow. Now, I've mentioned this quite a bit. The lesser Fibonacci line at 74.91 and the short moving average nearby, currently at 74.87, ought not to be looked at as two types of resistances or supports, but as attractors for the market. That's what we had yesterday, with the market being attracted back up there. Today, the attraction has gone a little far, as we opened well higher, but have slowed the ascent, ostensibly due to trepidation of the declining short stroke medium moving average overhead, currently at 75.18. The last chart to look at is the US dollar against the Brazilian Real. The chart for this pair is one of my most complex, yet all the pieces have their purpose. It was a straightforward, countering, bullish white soldier yesterday, but that's not the thing I'd draw your attention to. It is where we closed over all three of the recent influences of this market. The lower time of the recent broken early July to late June to late July Andrews pitchfork, currently at 548.11. The lesser 38.2% Fibonacci line, the big May to June move at 552.91, which has proved to be surprisingly obstinate, and the middle time of the mildly bullish early June to late July shift pitchfork this time, currently at 553.29. This last one and the 38.2% Fibonacci line were the most important. Now, it wasn't just the close over these that was important, it was what lay ahead. Nothing much. That's right. As I've recently said, we seem to have little overhead until the 575, 580 area. One caveat now, it was only the first close over these influences. Further closes as confirmation are needed. Well, that about wraps it up. So in the meantime, good trading and stay safe in the markets and in real life.